What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, Wealth Without Wall Street, the 3 steps to financial freedom through passive income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today. Wealth Without Wall Street Tribe, welcome to the show. Our good friends at Legacy Land Fund, Eric Scharaga and Quinn McArthur. Welcome, guys.
Thank you.
Thanks, Joey. How y'all doing?
Good. All right. So this going to be a 4-way. I feel like we're playing a game of squares here. So it's going to be hard to get all our words in today. And I'm usually struggling with Joey to compete with words. So Quinn, I'm going to let you go first. Give a quick background for our listener as to how you got into this whole land fund investing.
I was an Army officer, and for lack of better options, I was entering the private sector, and I had an Army officer mentor who was doing this and doing very well at it. So he was doing all things land, but the thing that attracted me most about what he was doing was the mortgage notes. And so he kind of took me under his wing. I did a few deals with him, and then kind of went on out on my own and did it personally, or did it.
But you said it was intriguing. What was the most intriguing part? Because as I'm listening to this riding down the road, like I'm trying to figure out, should I continue to listen to this one versus another one? Maybe your experience would entice me to continue.
Well, he was a retired officer, and all he wanted to do was fish and hang out with his grandkids. And I wasn't there yet. I wasn't at retirement age, but I knew that would, I knew time freedom was really one of my goals in the near future. And I just loved that. And I knew how much time he was really putting into it, and how much just autonomy that gave him in his life to do his leisure goals, as he called them. And I'm like, man, this guy's like, he's doing very well and really not spending a ton of time or taking a ton of risk. And so it was just really appealing from just at a really high level, how little time he was putting into it and how much time he was gaining from this passive strategy.
Nice. Eric, how about for you? What was your background and how did you get into the land financing game?
So I've been investing in real estate for 20 years. I started in fix and flip and buy and hold. And I really burned out on that after 13 years. And I came across residential mortgage loan investing. And I just fell in love with that. It was an amazing business. So I was buying a lot of non-performing, performing loans. And that got tough during COVID because the yields really plummeted. And I was actually on a call with Jamie Bateman, and he told me I should look into land. And I looked into it as an investment, learned a ton about it. And I thought, what an amazing opportunity for seller finance and for lending, because there's a real need for capital amongst investors in the space. So I actually moved entirely out of residential mortgage loan investing, and I'm fully vested in land at this point.
Well, Travis, you're listening to this. One, you're hearing note investing, you're hearing land. These are terms that you're familiar with. We're going to talk about maybe how they can be connected as we go through this. So whether you are a land flipper, an investor, and you're looking for short-term lending, this conversation may be pertinent to you. Or if you're just a passive investor and you're looking for ways to maybe invest in something outside of the what you've done up to this point, we're going to try to make this conversation pertinent as well. All right. So as we go through this, I want to kind of break this down maybe into the actual strategy. And I know that's hard to maybe go through multiple different strategies. So really the way I understand this, Quinn, is that you guys have really focused in on doing short-term loans to land flippers. Explain that strategy to me if I'm Joey and I know nothing.
Well, sure. There's so many different land strategies out there, from just the standard flip to kind of the subdivide and sell individually, entitlement plays, rezoning plays, and there's just so many different strategies. Large acreage, infill, rural, or infill like urban type properties, and everything in between. And the industry is growing. The industry is growing in numbers and in sophistication, but there's just a lack of kind of sophisticated capital out there. Banks don't tend to loan on these type of transactions. And so we do. I mean, we serve as the bank for these for these land investors. We come in and we provide kind of liquidity for them on the front side to purchase some of these deals, and we go into a partnership with them. And these are our, now we've kind of built our community, our network, and these are our friends and our partners, and there's just a huge demand for it, and we're excited to kind of fill that gap and meet that demand.
Russ, I've been telling you since day one of us being involved in the Land Geek and other communities that this is the most amazing opportunity. This is an old mortgage guy looking at an opportunity and saying, this is wide open. And so I'm just glad that somebody did it. I'm really kind of pissed that Russ didn't help me get this off the ground sooner, and he could have been interviewing me right now. But instead, we're doing this with you guys. I'm grateful. Eric, talk about maybe specifically how you partner with a land investor. Is it the guy that wants to turn around and then sell it on owner financing, or is it the ones that are doing some other sort of strategy that you kind of is your niche, your avatar, if you will?
So I work with land investors in two ways. The first way I work with them, and this makes up some of the investments in our fund, is we have a proprietary program for helping land sellers who want to be able to sell their land with seller financing. We help them with that process, and then we end up buying the note from them at closing so that they can completely cash out of the deal. And it really creates a win-win for everyone involved, the investor, the end buyer, and for ourselves. The other thing that we do is we do partner with our own vetted land investors who are running sophisticated land businesses, and we provide them with commercial financing at very low LTVs to protect ourselves and our investors. And we provide them essentially a sophisticated commercial loan that is 1 million times easier than what they would get from a bank. And it's really worked out well. There's a great demand out there, and we're providing a great service at a much lower cost to the investors that we work with.
What is the typical, for those maybe who are just now entering that land flipping space, or maybe they're not familiar with it at all, what really problem are you solving? Are most of these guys just needing short-term cash, or why is it that you guys are filling this void and it's not being filled by the traditional banking space?
Well, if you're a land flipper, you're going to need access to a lot of money in order to flip a lot of properties. It's a very cash-intensive business. And traditionally, you've had two choices. You can go through like a funding model and lose anywhere from 30 to 50% of your profit in terms of a share with your funder. And what we're providing is a more sophisticated option. It's a commercial loan. The property is going to stay in your name. And our average interest expense is only 7.5% of the loan amount. So people come to us and we're able to close these deals very quickly. And so they know that we're a reliable cash source when they come across great deals that they want to purchase and flip, or maybe they're going to do a bigger project that's a subdivide, whatever the need for capital is, we're providing a commercial option for them.
So I have a question for you then, Eric. It sounds like you're helping them solve speed to the deal and not giving up as much equity in the deal. Talk about the actual investor on the other side. Like, I mean, you guys obviously built a fund and they could be a part of that if they so choose, but why wouldn't they just go do this themselves? Like, how are you guys actually helping an investor to be involved when they could have just done it themselves?
Yeah, that's a great question. So if you do not intimately understand land investment, you can and probably will get burned. The due diligence on land is very, very different than any other residential investment or commercial investment. And you really have to understand all of the potential pitfalls in the investment. You certainly would not want to go out on your own and lend money on land that's utterly useless that you're going to end up having to take back. So that is part of the process here, is that both Quinn and I have a history vetting these land deals. And we're able to decide what's a good investment, what's a bad investment. And really what the fund provides is for investors is exposure to a large pool of land notes that we have purchased from other investors according to our guidelines and underwriting processes. And then short-term loans, which provide liquidity for the fund. And we have a lot of existing relationships with investors that we know their businesses, we know their level of sophistication, we know in a lot of cases their cash situation, and we're able to leverage those relationships to ensure solid investments.
All right, Quinn, I'm gonna let you jump in here. Like, here I am. I'm the ultimate optimist. I hear one idea and now I'm teaching it to somebody that, in 30 minutes, right? I'm an expert immediately, right? So I just heard what Eric said, sort of, but it was kind of like, well, but maybe that's for the average person. They would make the mistakes. They would run into issues, but not for me. Like, I've done other things. Like, I've had success sort of on Turo. Like, why couldn't I do this on my own? So talk about what really can go wrong there. I think that we need to, one, help people that are, understanding the value of what you guys bring to the table. At this other side, though, is that Joey has been hitting me up trying to say, we need to do this. And it wasn't until he had a conversation with you guys where he kind of started pumping the brakes on this deal.
Well, it goes into, the initial part is vetting the deal. And so while it seems just like, it's vacant land, it's raw land, there's no improvements on it. But to really dig into, everything from slope to perk to physical and legal access and really digging into the title company, the title work, even utilities, and determining highest and best use, having good relationships with brokers and so on to kind of figure out what this, is this not only is this an accessible and can I buy this land at a decent value, but is it marketable? And there's some art and there's some science to it. And until you've done hundreds of deals, it's kind of hard to determine. You need a good group of consultants around you, and you need a good baseline of past experiences, and guess what? It varies per market. Florida is very different than Texas. It's very different than the hills of the suburbs of Tennessee, which is different than the West Coast and in the mountains, and you're dealing with a different set of consultants and you're dealing with a different set of challenges or opportunities. And so it's seemingly like on the surface, like, oh, this is easy, I can do this. And you maybe could. And then, but there is a challenge on the due diligence. And then if you do tie up the property and you were good, everything's fine. Maybe your buyer now is having issues with whatever. Maybe that it doesn't quite meet their end goals with the particular property. Now, how do you work through those challenges? And so it's, once you have I think the average person can do it. It's just going to take some bumps and bruises and some scars along the way. And that's okay. And I think that's the value we provide. It's like, man, we've been through this for years. Eric and I combined, 15, 20 years doing this. And it's like, man, we kind of know pretty quickly how to vet these and do it.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to what'swhatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
How big of an opportunity is this? Like, is this something that you guys are having to scavenger around to find one or two deals a month, or is it much bigger than that?
So I would say, first, I wanted to add that before anyone gets involved in lending money, you need to understand that this is an incredibly complicated and frequently highly regulated industry. There are a myriad of laws and requirements on both the federal and state level that guide lending, even commercial lending. And you need to be aware of all of those before you enter a new market, or you could get into big legal trouble. So I will say that is an additional risk that somebody interested in this model, before they enter it and start doing it on their own, they need to be aware of that. In terms of the demand, there is a huge demand for this. I would say that the biggest demand is amongst investors who are just getting started and may not have much capital and may not have much experience, and that's not usually a good fit. So we tend to work more, we do work more with much more seasoned investors because we feel like it's a better fit for us. It's a better fit for the fund, and it reduces the risk overall.
I'm going to jump in here and just say, Russ, we talk a lot about how to create passive income greater than your monthly expenses is really what financial freedom is all about. And we've even said before, in order for something to be passive, it has to be active for someone else. What you guys have just outlined is this is not a passive activity. When it comes to lending money in these sort of deals, you have to have some activity in terms of the due diligence on both the borrower or the investor who you're backing, the land and the collateral that they're purchasing, and all of the legalities along the way. This is a very active thing. And so I'm kind of in agreement that, man, you shouldn't just be running out to do this unless this is going to be your active business. Now, I'd like to talk to you guys about just some examples to put some more kind of meat on the bones for people that they can see how it helps that land investor. Now, break down a deal for us of one that you've done recently. Eric, if you don't mind, jumping in to give us some of that.
Yeah, absolutely. So on the short-term lending, let's say we know an investor who has found a deal that they are going to purchase for $60,000, that they are going to simply flip for $100,000. We would require them, if it did pass the due diligence checks, we would require them to have at least 20% of their own money in the deal, or $12,000. That would reduce the loan amount, so 60 minus 12, so that we would lend them $48,000 for the property, as long as we were confident that it was actually worth at least $100,000. So we're going to be looking at a lot of different things besides just the makeup of the land itself, market value, days on market, the sophistication of the investor. The other thing that we do require on these deals is a personal guarantee from the borrower, which is just smart lending on any commercial deal.
So in that specific situation, are you guys at all thinking, hey, if they default, we will take the property back and resell it on our own? Or is that not an avenue of opportunity for revenue on your end?
So I always, when I'm reviewing deals, I always consider the worst case scenario as the probable outcome. And while I feel like an investor default is very low because we have such a low LTV, the investor has a low LTV, they have personally guaranteed it, that is always the worst potential outcome. And as the lender, we have the legal right to foreclose on the property and sell the property to be paid what we are owed on the deal. That is a potential option. And that's part of the safety here, is that we have a very low exposure on these deals from a loan to value perspective. And if the borrower did default, we could foreclose. And if it went to foreclosure, we would either be bought out at the foreclosure sale, or we would receive a deed to the property, and then we could go out and sell it with seller financing. There's a lot of different options for liquidation. We could also wholesale it to another investor just to get our money out of the deal quickly so that we could re-lend that money.
Well, I was about to say, Quinn, my guess is that you guys have a pretty big pool of land investors, right? So in the event the person who's trying to sell the deal, their buyer falls through, and for whatever reason, they don't have the personal means to pay you off for it, you have a pool of people that you can immediately go wholesale that property to that would be okay doing it. What could you share maybe another example just top of mind that of a deal that you guys have done that can help us like kind of get my arms around the strategy?
Another example, one of my favorite deals, just because, I mean, we tend to get kind of personally involved in some of these, and we get to know the land investor. Obviously, we get to know the borrower, kind of their story. That's part of our due diligence. Like, what's happening here? Why did this person buy it? Who are they selling it to? What's the end purpose for that buyer? You know, why do they want this land? And it was a gentleman who, he was a business owner in Texas, but he wanted to go hunting in Oklahoma, and he wanted 50 to 100 acres. Well, we knew a land investor who was selling 70 acres, kind of middle of nowhere, Oklahoma. The price was $200,000. This gentleman didn't have $200,000, but he had 20%. So he had 40 grand to put down, and so we stepped in at the kind of the point of sale at that transaction, and we held the note for this gentleman, and still do, and while he can appreciate the land with his family. And in this particular instance, it was for hunting purposes. So it was a guy who the seller needed, he didn't want to hold the note like our land investor. So it's a win there. We were able to cash him out. And then our buyer or our borrower, this gentleman from Texas, wanted to own the land, but didn't have the cash for it. And so we were able to kind of construct a structure so that he could, use that land for, potentially generations. So we love things like that. We love it. And every piece and parcel has a kind of a story behind it. And so that gives us, a lot of intrinsic value as well.
Thank you for giving another kind of aspect of what you guys do through the fund. But Eric, I want to come back to you on the deal that you just mentioned concerning the investor who went out. He's bought this property. It's worth $100K. You've given him a loan for $48K. What is your expectation of your own profit on that sort of a deal? And how long are you in that deal? Like, give some parameters around that, and like what the investor's paying you at what time frame, so on and so forth. Just give us a little bit more of a full picture.
Yeah. So we have two programs right now, and I'd rather not discuss the actual terms of the programs because they change. They tend to change just like any mortgage company. So right now we have one program that's interest only, that in which they make monthly payments. And then we have an accrual interest program. Both of these programs are a 1-year term. The second one is an accrual program in which they make no monthly payments. The interest accrues for 6 months, and then they have to make an interest payment. So they'll need to make an accrued interest payment every 6 months. And right now, we're seeing a fair amount of demand for both programs. The accrual program is a little more expensive because you're not making any payments at all for 6 months. But we're seeing demand. It depends. I hear different things from different investors in terms of what their strategies are. Some people like the lower cost. Some people like to be able to defer the payments, hopefully until they've sold the property.
As we start to wrap this up, I mean, as an investor, right? Somebody who'd be looking at maybe being a part of your fund, I always like to ask the question, tell me how I lose all my money. So there's the question for you. Tell me how I lose all my money. What has to happen? What would be the black swan event?
Yeah. So, we would be losing money along with you because both Quinn and I have made significant personal contributions to get the fund started. So the fund is diversified amongst a lot of different borrowers on both the note side and the lending side in a lot of different markets all across the United States. So there would have to be a cataclysmic event in this country that affected the real estate market nationwide. And even if that happened, values nationwide would have to drop by more than 50%, 75% before investors would be affected. The other issue here is that right now there is a huge difference in our fund between what the fund takes in every month and what it needs to pay investors. That additional revenue that comes in is not used to pay Quinn and I. It's used to reinvest into more loans. So over time, that snowball is just going to grow. And there is going to be a bigger and a bigger difference between what the fund brings in and what the fund needs to pay investors. So to answer your question, I guess what would need to happen is that every single borrower would need to stop paying at the exact same time for some reason in order for everyone, ourselves included, to lose their money.
What I heard during this podcast episode, Stallion, is that everybody needs to be in the banking business. That's what Nelson Nash would say, right? Right. Banking is, there's a lot of money to be made in the financing engine, and some people will go actively do it, like you two have done, Quinn and Eric. Some will do it in a very passive way, meaning they will just be maybe a lender to a fund like yours or a participant in it. But also people need money, and there's opportunity. And if you build enough passive income, you can create an excess of surplus and reserves that can protect you from downfalls. Quinn, tell us, if somebody wants to connect with you guys, where would you want us to send them?
A website's a good resource, legacylandfund.com. So, I mean, you can see our offering on there, and then you can easily get a hold of us through there. I think it has our email address, info@legacylandfund.com. That'll go directly to me. We'll schedule a call. I can kind of take you through the intricacies of what we do and exactly what we offer. And then we have other, materials we can send. Our typical deal, I know we kind of breeze through that, our typical deal and kind of how we compare to other funds and so on and so forth. So a lot more information to kind of hand out and pass out.
That's super cool. Well, Eric, Quinn, thank you so much for coming on and sharing with our audience today.
Thanks, guys.
Well, as always, we appreciate you listening. If you found value, take time to rate and review this show. This is a great way for us to understand what sort of episodes are resonating with you. And we'll see you on the next episode. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.